All right, welcome to this explainer, where we are going to peel back the layers of the market. We're going way beyond the headlines today to decode the hidden forces, the big bets and the structural risks that are really moving the needle. So let's really dig into this question, right? Because on the surface, things look pretty straightforward. Money's flowing in, sentiment feels strong, but the real story, the one that can catch you completely off guard, is always hiding in the data underneath. So here's our game plan. We're going to start with that simple, bullish view everyone sees. Then, we'll dive deep and expose the volatile undercurrent. After that, we'll track where the big money is placing its chips, shine a big old spotlight on one stock with some explosive potential, and finally, we'll put it all together into a single map for you.
Okay, first up, let's talk about the simple, positive story that, let's be honest, most people are seeing and reacting to right now. This number pretty much paints the whole picture. We saw over $743 million in what's called net positive delta flow into the big index ETFs. Now, just think of delta as the net dollar amount betting that the market's going to go up. A number this big, well, it's the market's bullish headline. It's the first thing everyone sees.
Now, this is where it gets really interesting. While all that ETF flow looks great, the broader market structure is telling a very, very different story, and frankly, a much more dangerous one. There's a huge risk factor building just beneath the surface.
And here it is. Look at this massive number. We're talking nearly $5 billion. This thing acts like pure fuel for volatility. In market terms, this is a huge negative gamma position. And what it suggests is that dealers could be forced to accelerate any market move, creating the potential for some really violent, unpredictable swings.
So you're probably wondering, what the heck is gamma, right? Well, the crucial thing to get is that it's like the market's accelerator pedal. It doesn't determine which way you're going, but it controls the speed and the violence of the move. This high negative gamma we're seeing, it's like giving the market super sensitive steering. The tiniest turn can cause a massive, sharp swerve. And if you want a perfect example of this conflict in action, just look at Pfizer. It is a brilliant illustration. The directional bets, that's our delta, are extremely bullish. We're talking 98th percentile. But at the exact same time, its gamma is in the first percentile, which is historically low. This creates a total paradox. Traders are betting on it to go up, but its underlying structure means it's primed for a sudden, really volatile move.
So with that in mind, let's switch gears and see how this dynamic is playing out in specific stocks where the big institutional money is making its moves. You can really see some clear patterns starting to emerge.
We're seeing three really distinct stories play out. First, you've got Robinhood. That's a pure momentum play, with over $162 million in bullish delta coming in on the back of some great news. Then you have the silver ETF, SLV, which is a pure volatility bet. And we know this because its Vega, which basically just measures how much an option's price changes when volatility spikes, is in the 99th percentile. See, traders aren't just betting on direction, they're betting on a massive price swing. And finally, you've got targeted speculation in a huge name like NVIDIA, with heavy call buying all focused on one single strike price.
And if we zoom out to the sector level, the picture gets even clearer. That bullish positioning, it's heavily concentrated. Institutions are just piling into financials and healthcare. You can see the flows there are in the 99th and 94th percentiles, but they are actively betting against metals and crypto ETFs, which are seeing some pretty significant bearish flows. So money is rotating, not just flooding into everything.
But, amidst all this institutional data, our algorithms flagged activity in one small biotech company that was just so unusual, so incredibly concentrated, that it absolutely deserves its own spotlight.
The name is QURE, ticker QURE. Now, this is a biotech company where it looks like some traders are making just enormous, highly speculative bullish bets that really suggest they're anticipating some kind of major event.
Okay, first, check this out. We saw nearly $45 million in premium spent buying call options at a single strike price, $15. I mean, to see that amount of money pour into one specific bet on a smaller company, that is a massive, massive signal.
And they weren't done. Just when you thought that was crazy, on top of that first massive bet, another $32 million came flooding in, this time targeting the $30 strike. So this isn't just a bet that the stock is going to go up. This is a high conviction play that the stock could double or maybe even more.
So, how do we make sense of all these conflicting signals? You've got the bullish surface, the volatile core, these super concentrated bets. Well, here is a clear map that lays out all the key setups we identified in today's data.
So here's our final map. This lays out every single type of signal we uncovered today. You have that big picture directional conflict in the indexes.
You've got the clean momentum story in Robinhood. You have the pure volatility plays in Pfizer and silver. And then, at the very, very sharpest end of the risk spectrum, you have our speculative gem, QRE. I mean, that unusual buying just makes it an absolute must-watch.
So what this data really shows us is that there isn't just one story playing out in the market, is there? There's the surface story everyone sees, and then there are these hidden narratives of volatility, momentum, and some pretty incredible speculation. So the real question this leaves us with is, now that you can see these hidden signals, which story will you be watching?